right, so welcome to Game Plan Sunday. Today is June 6, 2021. We're going to take a look at what occurred over the markets over the past week. On the website, Jackboyz.com, you guys can see the review of the week from the past week. And we had at the number one index is Bitcoin at 5%. But you got to understand Bitcoin took a huge loss before then. So that 5% really isn't nothing because Bitcoin moves in higher percentages. But, you know, in comparison to everything else, yeah, 5%. Oil was up 4.11%. So we have oil that is up. The Russell 2000 was up 0.77%. The Dow Jones is up 0.66%. S&P 500 up 0.61%. The Nasdaq was up 0.48%. The dollar was up 0.09%. Gold came in negative at 0.64%. So that was real interesting. For the most part, with oil rising the way that it's been doing, which we'll take a look at that, really interesting. But a lot of the economic data that we had that came out last week, you know, as far as the job numbers, the ADP numbers, a lot of the data that we had came out, the markets was really just on edge about it. And the markets was chopping the whole entire week. Okay. It was super choppy because of fears of what was going to, you know, come through with the data. And so the market ended up coming back, ending on a positive note on Friday once the data came out. And, you know, it calmed the markets down for this time frame. But, you know, the whole overall theme, as we've been talking about for the past couple months, has been inflation. A lot of the data that we were seeing months ago, we're actually starting to see it come through in the markets now. So our talk track for Game Plan Sundays, nothing has changed. It's all been the same. So, you know, just don't need to bust you in the head every day with the same information. You know, I know a lot of YouTubers doing that, but it's the same information. Ain't nothing changed. It's still inflationary, and that inflation is still coming out. But the big thing is supply chain shocks. Lots of supply chain shocks all over the place, which is, you know, just crazy because we have shortages. We have like a shortage on every freaking thing. And so, you know, with all these shortages, the market is trying to find its way back. You know, I told you guys, you know, about the ant situation, you know, how ants are. And if you actually, you know, mess up their direction by just taking your finger, the chemicals in your finger can mess up their scent, the path, and they just get distorted. They get crazy. So we are in a very distorted market. Nothing about that has changed. It's actually getting even more distorted as the government tries to fix situations that end up causing even more problems. And so, which is, you know, another major thing where we have some government stuff, you know, coming out with the politicians talk that is going to impact the market. So we'll talk about some of that later. But yeah, like Ron was saying, we got the phantom cyber attacks. Yeah, just random cyber attacks. I would say just random cyber attacks, you know, all over the place. We had the meat. It's going to be a meat shortage with the beef suppliers having a cyber attack, having to shut down, the largest one. So that's going to, you know, again, you get that impact up front. Later, you have to deal with the consequences. And that's all inflation. So you see prices going up. And so one of the biggest things is that you got to understand the prices of everything is super elevated. Now, the CPI numbers that the Feds and them use, those numbers are not reflecting the reality of what's really happening in the economy. And so you got to understand, because they are looking at this thing based off of data, they're going through a statistician fallacy. Okay. The statistician fallacy that there's no inflation. Okay. That's what it was at first. Now we actually have inflation. Okay. I've been telling you guys about this stuff. I've been watching. I've been telling you we're going to go through inflation. I'm seeing it. I was seeing it before it came out. Now it's here. Now they say, oh, it's here, but you know what? It's transitory. So transitory, that's their way of trying to keep the markets calm, okay? Because they have been creating this environment in the first place. So again, how are you going to solve for the environment that you created? And they're looking to actually create even more inflation because of this 2% target that they have, which is just crazy. And again, the way that they track these numbers, these baskets of goods is crazy. But you guys can see inflation in everything in life. I mean, we're seeing record high pricing for everything, especially in the housing market. Housing market is looking crazy to me, actually looking a little scary to me, actually. Housing market is looking very interesting because the rates are super low, but we have supply shortages also. And you have astronomical prices of the houses right now. And the homes are getting too, or actually already too expensive for, just regular people to be able to afford them. Okay. And this is a big issue if the Feds have to raise their rates, if they are forced to raise interest rates to deal with this inflation, they're going to pop every bubble. I mean, so, it's crazy. We're in a very experimental economy, I must say. It's in a very experimental economy because of the things that they're doing. Again, it's trying to kick the can down the road as long as they can. But it is very, very treacherous right now. We haven't seen anything like this ever. And there's a lot of beef with economists that's trying to call it, but nobody can call it. But if we take a look at history and how this thing should play out, this is not going to end good. Okay. Well, all the stimulus that's in the economy and everything, we got the job numbers that came out. We actually missed the job number expectation. Job numbers came out pretty good. Let me actually see if I can find the article. Again, all of this is on the website. But we got the job numbers that came out, and it was pretty good. But they missed the expectations. Okay. I think Wells Fargo had like 700,000 jobs they were expecting. And I think mainstream, the median was about 650,000 jobs. Let's see if we can find this. That's about 650,000. I think we end up coming in at 550 something thousand. We end up coming in short. So here we go. Change in non-farm payroll, 559,000 versus 675,000 expectation. Okay. So we came in short. This is what actually and it's crazy because it's not good news, but the markets rallied on it because the markets are choppy all week, right? But when this came out, this relieved the markets because again, this inflation stuff is worrisome to the market, and the markets are thinking that the Feds is going to be forced to capitulate and raise interest rates and everything to try to tame inflation. But when you get these numbers coming in lower than what they were expecting, it's kind of like, oh, this is bad news, but it's good news. It's weird because they're looking for the markets. You got to remember the markets are looking for further continuation of handicapness assistance from the Feds. So anything that would say, oh, we're going to continue to assist is good news for the markets because that's the reason why the markets are so high where they are in the first place. Okay. So the markets are super high. Okay. Everything is high. This is the everything bubble. But the thing is that we're in the summertime. Like you got to understand, this is where you normally get the most economic output from your economy. Okay. Where you get the most jobs. And if you don't actually get to produce those jobs in this time, it's not going to happen in the third quarter or the fourth quarter of the market of the year. Okay. So they need the big prints now. They don't get the big prints now. Then it's like, okay, that's not good. But they're looking at it from that perspective. Okay. So they say, oh, we don't have enough jobs. So again, that's not going to produce enough inflation because they're looking at it like, hey, we get enough jobs, it's going to be inflationary. But I don't know if you guys have been out, but I've been out and it's been crazy. Everywhere I go, there is a hiring sign up, need help. Businesses are looking for help and they can't get it. Okay. Now, this is interesting because we got to keep our eyes open for the markets and what's coming down the pipeline. So with the extended unemployment benefits competing with entrepreneurs, people are just not going to work. I mean, you'll be a dummy to go to work when you can actually sit home and play video games or watch Netflix and make more money than people that's actually going out to work. Doesn't make any sense. So the government is creating this environment that is a non-productive environment. Now, you got to understand is that, we talk about this all the time. People don't want money. They want what money can buy. You don't want money. Money is nothing. It's just a tool. It's a medium of exchange. It allows you to get the goods and services that you want. So when you judge an economy, you have to judge it based off of the goods and services that it produces. So you have all these people out of the economy, not doing any kind of production, but yet you have an economy. First of all, you have an economy that was locked down that's now opening up. Okay. Now, for whatever reason, it doesn't matter. We just know that people are opening up and people are going out. Mask on, mask off, or whatever, vaccine or not vaccine, doesn't matter. What matters is that they are out now. And because they are out, they are consuming. Now, who's producing what they are consuming? You don't have enough production for all these people to consume. That's why We got the trade deficits going crazy because we're having to import a lot of the goods and services. We're having to import it in so that people can consume because we are not producing it ourselves. But because we're not producing the amount of goods, and then we have people that's being unleashed into the markets, armed with money that the feds and the government printed, so they got extra money. Now we have more dollars chasing fewer goods and services because we have more dollars chasing fewer goods and services. This causes a bidding frenzy. This is the reason why the prices are going up. Now, don't let some crazy, ridiculous person tell you that this is capitalism's fault. It is the government's intervention that is the problem here. So you just got to really understand this is the environment that we're going in. So because they're creating this environment that's this bidding frenzy, everything is going up. Okay. This is a silence tax also. So you got to understand what inflation is. This is the inflation. So instead of them directly taxing you, they're creating inflation, and it's making you more poor. All right. So they could do it taxation way where, it's through the legal system, or they can do it dishonestly through inflation where you can't see it. OK, it's the unseen. All right. You don't see it, but you see it when your ass go to the grocery store and you're trying to buy food, or you're trying to put gas in your car, or you're trying to go buy a house right now. A lot of people can't even get into these homes right now. So the way it's looking to me is that the housing market is going to have to taper down right now because of the shortage of supply. The prices are too high. And once it reaches the certain equilibrium where they just tap out, where they can't buy these houses no more at these crazy prices, then perhaps supply will try to catch up. But you play a daily game if you're trying to time this thing. But also with the government intervention coming in with the mortgage forbearance and the rent moratoriums, also you have a lot of landlords that, are in a tight space where they have a place, but they can't kick out their tenants. They can't make any money. And they probably have a mortgage on the spot that they're actually renting out. That's what most investors out there do. And the tenants paying is servicing the mortgage itself. That's what's, paying. So if they can't collect, no money because of the government's rules, then it's eating their personal wealth. So now they had to come out of their own pocket to try to foot this. And I've been seeing a lot of these guys, they're tired of holding on. So they're trying to get, they just selling out, because it's a really crazy market right now. So anyway, mortgage, housing market is looking crazy to me. I don't know what to call it, but it is looking a mess. I'll tell you that right now. And I don't think that it will end well. There's lots of professionals that are calling for a major crash by the end of 2021, because we can't continue to go down this path. Now, the thing is that we have 25 states that's supposed to be coming off, that's supposed to be ending this extended unemployment benefit. Now, I don't know if y'all really understand the impact of that, but I think that it's going to have a negative impact on the markets. Okay. That's less money. Okay. A lot of these people have been getting money. They've been playing the meme stocks, right? They've been playing, they got their Robinhood accounts. They playing the AMCs, the game stocks, the Blackberries. Like, yeah, y'all didn't know BlackBerry's still out. Yeah. Nokia, all these companies that have failed, these meme stocks, they're popping, people got this extra money. They don't even need it, but that's what they're spending on. And so the markets is actually benefiting for all of that. Now, with these, I think it's 25 states supposed to be ending this month. Okay. And so if they end that, that's going to be negative on the markets. We also got the feds that's talking about rolling back their purchase of corporate bonds. That's also negative for the markets, because it looks like the feds are trying to remove their support. And I don't want to misinterpret what I'm seeing, but this is what they're saying, that they're going to roll back the corporate bonds purchases. Now, you got to remember, they're doing $120 billion of bonds a month to suppress, these interest rates. Okay. And so, like, even when we look right here, okay, we can see the yields all the way down, here, zero. It's crazy. So we see that. But it's talks that although they may be rolling back on these corporate bond purchases, it's not going to be a major impact for the markets. But when they decide to roll back that $120 billion a month, it's going to shake the markets. And I just saw today, Janet Yellen's coming out talking about higher interest rates could be good for the markets. I don't know what the hell Yellen is smoking on out there, but if they raise these interest rates, it's going to be mayhem. Okay. You don't even understand, when they raise these interest rates, it's going to be crazy. Okay. if they raise these interest rates. Now, this is now because the markets are under the belief that the Feds are going to raise interest rates. You have certain asset classes that have not performed as well as we will hope that they will perform in a high inflationary environment, such as gold. This is the reason why, because of the belief. Belief is a powerful drug. It doesn't mean that it's going to be true. Okay. And Peter Schiff, he said that if you have a headache and a handgun is your only aspirin, will you use it? I love that analogy because I never heard nobody say that. And for two, that's what it is. If you have a headache and a handgun is your only aspirin, would you use it? No, you're going to kill yourself. So this is, one of the reasons why we don't believe the Feds are going to raise the interest rates, not by choice. But should they raise the interest rates, it will be by force. Okay. And if they do so, it's going to prevent a lot of people from being able to get into homes. Okay. They will no longer qualify. We're starting to see those rates go up right now. The mortgage markets are starting to go up more. And the guidelines will start to tighten where people have to put more money down on these to try to get into these homes. But it's going to disqualify a shitload of people. So you can just forget about it. I mean, even right now, first-time home buyers are just done pretty much. I mean, you're going to overpay for a house and it's going to be ridiculous. But then at the same time, with those rates going up, people are not, having to service their debts. It's going to be too expensive. You're going to see defaults out the ass. It's going to be crazy. And so it's looking like they're talking about, I'll just say, not say that that's what they're going to do, but this is what they're talking about. So there's a couple of meetings that's coming up that the market is going to be paying attention to, the Jackson Hole situation, and then the next FOMC meeting. The markets are getting real antsy about what the Feds is going to do. So we'll see some market movement once we get that information revealed. But this is why the markets are so choppy. Nobody has a real direction of what's going to happen. We know theoretically what happens, but then we want to believe what the Feds is saying. And then we're seeing, reality. Nobody knows what to make of this, really. But I just don't think that it will end well. All right. So, which that is very interesting. So it's a lot of data that's on the website. We had the PMI numbers that came out this week. Okay. If we go back in here, you guys can see that was just the servicing numbers. We had the manufacturing numbers that came out here, 61.2%. All right. And again, it's the same thing. We don't really have to go down it. But what I'll do is I'll go back to the servicing real quick because I did some highlights on that. And I'll just go over that so you guys see. And again, this is before you see it in the markets. This is the manufacturers. When they say you're going to see later. Okay. So it's June now. And you're probably not going to see this stuff till a couple months down the road. But this is what they're saying right now. Look at the highlights. Resulting in labor shortages and supply chain gaps. This is the whole overall thing. Okay, you can read the whole thing, but basically, they're talking about the stimulus money and stuff. But anyway, labor shortages and supply chain gaps. Container delays are impacting our supply chain. Delays at the port of Montreal and West Coast ports. All right. Shortages of crucial material and equipment. Metal coils for production are especially scarce. Steel and copper went higher than anticipated, and shortages are having an impact. Some supply categories remain constrained, yet are somewhere manageable, limiting the impact to daily operations. Cost increases and long lead times with steel and steel containers, worker shortages, temp labor, and the like. Transportation, labor, steel, and general commodities are all increasing in price based upon general inflation and the rising price of oil. Stimulus checks and extension of unemployment are hampering their ability to hire workers. Seasonal labor and H-2B visa workers are in very short supply, causing an uptick in cost per hour. Some employers are reporting they are offering cash incentives of US $50 if you show up for an interview. That's how bad it is. They're giving cash bonuses for people to show up. I even see McDonald's, I think it was giving like $400 bonus. I actually seen this in real life. Anyway, material shortages, increased prices, and qualified personnel shortages are becoming a much larger concern. Very concerned about the rapid and continuing price escalation for any products with copper, steel, and polyvinyl chloride. Production issues and lead time extensions are not improving. So it's not getting better. All right. Increase in raw material costs, freight rates, huge freight delays, U.S. port delays. All right. Delays on product availability and shipments. So, and this is because of the COVID surges out in India and Taiwan. So as you guys can see, this is not good. The shortages of everything. You remember I told you people don't want money. You want what money can buy. Remember, you don't want money. The money doesn't mean anything. It's just a medium of exchange to get what you want. So you're exchanging that money to get goods and services. And if you can't get the goods and services, then, you know, if it's a shortage of it, then you have to compete for it. All right. So you got all these dollars that's competing for it, causing the prices to go higher and higher. So this is all spells out in the future that we're going to see even more inflation. All right. But this is very problematic because I was listening to an interview with even Bill Ackman. I call him the Wall Street golden boy. You know, it's funny because, you know, everybody's saying the same thing, is that, you know, the Feds are saying that, you know, inflation is transitory. But with the wage inflation that we're seeing now, see, they was playing it off when I was calling this back in February. They was playing it off because they wasn't seeing wage inflation. And they was actually talking about passing the $15 an hour minimum wage. So the government want to impose these regulations to make it happen. But instead, they don't have to do it now because all they just need to do is keep the pressure on. And they're probably the ones that's doing the damn hacking of shit any damn way. Who knows, right? It's just really random. And I find it very convenient that all these hacking and ransom stuff is just out in place. Anyhow, I digress. But as we see all this stuff taking place, companies cannot produce the goods and services to keep up with demand. So now they are forced to raise the wages, even though it's going to cost them profit margin. It's going to make them not to be able to compete. You know, they're not going to be as competitive. They have less money. OK, and so then they're going to try to figure out ways to try to save money by bringing in robotics, self-service type of services and things like that. And people will start to call them evil and this, that, and the third. It has nothing to do with morality. OK, this is not church. This is the economy. All right. They have targets and goals to meet. So the moralists will always try to mix morality with things that require economic lens. OK, this is simple. You're not going to be in business if you can't make a profit. OK, that's the reason why you're in business, to make a profit. You deserve to make a profit. That's what you do. OK, by providing value to society. But they are forcing, because these companies are now competing with the government. OK, they're not competing with other businesses. They're competing with the government. OK, the government said they're fixing, helping people, giving them all this extra extended unemployment. And these companies are having to employ. So if you know anybody that's a small business owner, they can tell you, man, they can't. I know small business owners, they tell you, man, I can't afford to pay nobody $15 an hour. Right. I just can't do it. I'm going to have to go out of business. Right. But the government don't care. All right. They got their own agendas, man. And so they just let the markets do what the markets do. The markets will solve for it, but they won't. They keep on intervening, and it's causing more and more distortions and making the problem worse. All right. And it's going to continue to get this way. And it's really, you know, a lot to do with the politician stuff. You know, politicians, they got their 4 years. They just want things to look good on paper for 4 years. After they gone, y'all can deal with it afterwards. I just want the numbers to look good on my watch. And whatever we had to do to make that happen, that's what they're going to do. Kick the can down the road. You just make the problems even bigger. Now your kids got to deal with it, right? So anyway, Bill Ackman, what he was saying is that once employers raise wages, they don't lower them. So how can this be transitory? Huh? It can't be. You know, you don't see employers raising your wages and then they just cut your salary and stuff like that. And it's just not something that we see in the markets. You know, once they raise your wages, you know, I see Jack in the Box hiring $12 an hour and Taco Bell $12 an hour, right? And it's like, yeah, once they start, they can't stop. You can't take it back once you put somebody on payroll, right? I mean, then you're gonna lose all your workers, so that's permanent. So inflation is not transitory. This is what Bill Ackman said, and he's mainstream Wall Street golden boy. All right, so I pay attention to mainstream too. So anytime they, you know, come on board, then you know it's official. All right. So anyway, that's the whole key right here. It's all this inflation. Experts on OPEC decision not to ramp up production despite oil demand. You know, OPEC talking about not rising, not putting out more oil. You see oil prices, you know, they're going up crazy. Anyway, we did hear from Trump, you know, talking chunk about China again. the whole situation with Fauci came out with the emails and stuff. That was interesting because he got banned for 2 years from Twitter. That's in the news. Then we can see Bill Ackman again with his SPAC deal. Again, you guys can check Bill Ackman out in the Legends and Gurus group, and you can follow all the information I was just telling you about before. All right. Bitcoin drops after Elon Musk tweets a breakup. So Elon Musk, I mean, this guy is crazy. But Elon the Don is what I call him. You know, Elon the Don, he's always, you know, out there on Twitter just creating a bunch of ruckus. What was interesting is today, I don't know if you guys saw this, but basically Anonymous came out and they threatened Elon Musk. Did y'all see that? Anonymous, the hackers. Let me see if I can find it. It's in the timeline up here. There we go. This is the video. I'm gonna let you guys check that out on your own. But if y'all know Anonymous, they don't be fucking around, B. All right. So they pissed off at Elon right now, and they sent a threat his way. This popped off today. I don't know what it means, but they said that they are a legion. They said that they are one, and they said to expect us. I mean, they was talking mad greasy about Elon, and it was like, you think you the smartest and this, that, and third, you met your match. And I'm like, I don't know what all of that's going to turn out to be, but I did tag a couple of y'all in there, especially you, Topaz, because I know you're coming through with the popcorn. Mia, you got to come through with the extra butter, all right? Because Anonymous, I don't know what they're going to do with Elon Musk, but they really pissed. I mean, it was really talking about how he's really messing up people's financial lives by telling all his, you know, this crap on Twitter and pumping, you know, cryptocurrencies. He's pumping Dogecoin, pumping Bitcoin, and then he's coming back and he's like breaking up with them. And then you got all these, you know, young people who are just followers. That's why I tell you guys, stop following the fucking gurus, okay? You need to learn this game for yourself. You understand? Following somebody else, it is not a strategy. If you are going to follow someone, you must do your due diligence. That's why it's important that you learn. Now, since crypto's been popping off, we haven't been as busy because everybody's trying to go on the crypto side of things because it looks so easy. You don't have to learn how to read the charts and interpret the market and go over macro and all the stuff that we're talking about. All you got to do is buy and hold for the rest of your life and you're going to be rich. I mean, you really got people out here that think that that is a strategy. I'm not here to bash nobody's beliefs. I'll try to be fair as possible, but that's just the reality of what these guys do. Now, there are some smart crypto traders that's out there that know when to get in and get out. I rock with them, right? Because it's pure speculative. We're speculating, get your money, get out. But these other guys, I mean, they believe they're going to be super rich. They believe Dogecoin is going to the moon. In fact, they had this major conference this weekend, and this one guy jumped on the stage, ripped his clothes off, hollering Dogecoin going to the moon. They had to escort the dude off the stage. All right. I mean, this is insanity 2.0. And we've seen bubbles before in the past, 2000, the dot-com bubble. We saw the 2008, you know, but this really looks crazy to me. This market is so crazy. So for you new people that's out there, you know, don't feel alone. This is not normal market behavior. This is, we're in a bubble, and in the bubble, things are freaking crazy. Okay. So it's a lot of things that you may have learned when you were getting your MBA. It's kind of make you feel like you should have just thrown that out the door window because it's not helping you right now. But if you stay fast, you know, the markets will find their way once again, but it's insanity right now. Okay. So just keep that in mind. So anyway, that was information on that. The forbearance options I was telling you guys about supposed to end on at the end of the month. And I think I just got this report saying that they're going to extend the forbearance, which is interesting. I know I got it up here somewhere, but that's going to be interesting. All right. So the next note here we talk about is going to be this G7 nations reach historic deal to tax big multinationals. Topaz came through with the scoop in the news feed. Don't be a stranger. If you guys got some juice out there, drop it in the news feed or drop it in the groups. Thanks, Topaz, for coming through with that info. This is really interesting. We talked about this before, but I'm going to actually throw out a reference that I want you guys to do. And again, we're going to drop that movies group so you guys can check it out. But there is a movie that I am going to recommend for you guys to watch. Okay. And before I can even tell you this, I want you guys to go and watch this movie called Atlas Shrugged. Okay. Atlas Shrugged. I'm gonna drop it in the chat. You need to watch this. You can find it on Amazon Prime is what I watched it on. You can find it on YouTube. You can find it anywhere. This is your homework. Watch this movie. All right. They got part 1. They got part 2. They got part 3. I'm gonna actually save you a little heartache. The movie itself is based about economics. It's a fictional novel by Ayn Rand, who's a libertarian, but she wrote this crazy book years ago, and people loved it. It just described everything. So anyway, they decided to make this modern kind of movie on the book. And I think they made it like 2013. So now you're going to learn about how this whole system works when you watch the movie. What you're not going to like about the movie, because it's 3 parts. It's part 1, 2, 3. Every damn movie, they change all the characters. Okay. They're the same characters, but they're different actors. I hate that. So, it's not the best, greatest movie ever, but you're going to really understand what is going on. You need to watch it to understand what is taking place right now, what they're trying to do right now. Okay. So I'm going to give that reference to you guys called Atlas Shrugged. Make sure you check that out. And you know about who is John Galt. When I hear y'all asking that question, I know that you watched it, okay? Don't make me pop quiz you, okay? But you're going to need to watch it. And here's a book here. I'll tell you guys, I told you guys about this guy, Klaus Schwab, okay? This experimental economy that we're in because of COVID. COVID is the excuse, okay? The excuse for them to try to this experimental economy. This is what they're trying to do. And this book gives you a lot of clues on the way they think and what they're talking about, using technology and, the statistician stuff, that's what this is about. But years before this was published, Nobel economist F.A. Hayek, he wrote this book called The Road to Serfdom. This is one of my favorite books. It is remarkable. You can listen to the Audible. I actually listened to the Audible before I actually even bought the book, but I had to get the book, But you can listen to the Audible. It's a good, listen also. But he described all these things years ago. I think he wrote this one like in the 40s or so. Him and Ludwig von Mises, these guys, the Austrians. But anyway, he talked about all these things. So when I give reference, I'm giving reference for my studies, and I'm actually seeing it take place in real life. So it actually does bother me because I'm like, this is crazy because they talked about this is what they're going to be trying to do. And this is actually what they're trying to do. So this whole G7 nations reach historic deal to tax big multinationals. What you guys got to understand is this. When I talk about having a capitalist state of mind, capitalism is all about free market-based competition. It's all about competition. Okay. So you have people that argue against that. Those are the Marxists or the socialists, whatever they want to call themselves. Okay. I am all for freedom and competition. That's why I support capitalism, not cronyism. People always talking about conflating the arguments. Oh, cronyism, you have, this corporate nepotism or corporate welfare. No, I don't believe in that. I believe that they should compete. And if they fail, then let them fall. Okay. Nobody gets saved. Okay. The economy has a way of dealing with everything. You don't need nobody trying to direct anything. Okay. And it sounds like chaos to some people, but it is the natural order. It always will work itself out. We have all these distortions because of the intervention in those things. So, but basically with these guys here, what they're trying to do is force, okay. They're trying to kill competition and to force corporations to suffer Joe Biden's tax policies. Okay. These tax policies that Joe Biden wants to actually push out, they know that corporations will not pay those taxes because they will leave. They will jump ship. They will go to more competitive countries and they will enrich those countries. So what they came together to do, they formed a meeting. This is Janet Yellen. She used to be in charge of the Fed. She's over top of the Treasury now. And the G7 is the group of 7. It's got United States, it's got Japan, it's got Canada, it's got Great Britain, France, and Italy. Okay, all these countries, they came together and they're trying to direct what they're going to do with the world, basically. And so basically they're just saying that they're going to pass this global tax of 15% for corporations. So therefore, you can't escape it. Okay, which is interesting. So they're going to try to make the company suffer it because they need to usurp freedoms and take money from the capitalists to fund the socialism that they're trying to do, which is basically universal basic income, we're really living universal basic income right now with the extended unemployment benefits. Okay, it's people just not working and they're making a lot of money, but they're not working. So, but that's got to come from somewhere. The resources got to come from someone who's making the money, which are the capitalists. Capitalists that make money. Government doesn't make money. Government doesn't produce goods or services. Capitalists do. So you need capitalism. That's why you can never have complete socialism, because socialism is a consumption-based system. Somebody has to produce. You can't consume what you don't produce. Capitalism is a productivity society. It's a production society, basically. So anyway, they're coming together to try to force these corporations to suffer the 15% tax. Now, this is going to be bad for equities. Okay, you got to understand, for stocks, this is not good. Okay, these companies, they need all the extra cash they can to continue to drive value, and any breaking that is not going to be good. So just keep that in mind. They're supposed to be having another meeting with the group of 20. It's going to be 20 nations. So they started with the group of 7, the G7. Then they're supposed to have another meeting here shortly and with 20, and they're going to try to propose this, and they're going to basically try to force these countries to impose these rules themselves. Now, keep in mind, market competition is that America want to keep high, corporate tax. I think America got like the second highest corporate tax rate in the world. So smaller companies, they would love to welcome them to their country to create wealth for their people. So they incentivize corporations to come there by lowering tax rates. Competition drives prices down. You got to understand the reason why you have prices going so crazy high is you have a lack of competition. But when you have more competition, everything gets cheaper. Look at your damn 4K TVs. You remember how expensive they used to be? I went to Walmart. They had like 70-inch TVs on the floor for like $400. Things used to cost you like $5,000. And you have so much competition. Competition brings prices down. Okay, so that's what it does. They're competing. But when you remove competition, keep prices up. But what they're trying to do is pass regulations, and they're trying to force these countries to actually get on board with them by threatening the countries with sanctions. Okay, if you don't get on board with this, you're gonna be, you're gonna suffer some kind of consequence. So you might as well come on board with this. So when you guys watch this movie Atlas Shrugged, you're gonna totally come back to this conversation, and you be like, yo, that is crazy. You're gonna learn it from Atlas Shrugged what's happening. Okay, but this is not going to be good, not at all. All right, there we go. All right, so I already covered the Federal Reserve, talking about selling the bond portfolio. Here's a list of what the Federal Reserve, just the bond portfolios that they're actually offloading here. So if you guys want to take a look at that, snapshot is right there on the site. And this global tax thing I was telling you guys about, there's some good articles on the website that's covering all of this. The OECD, they also talked about it here. The corporate taxes are harmful. In fact, in this article, what they said is, let me go here real quick to see. What did it say? Okay, I'm going to just click this last line. The main recommendation of the study is that if countries want to enhance their economic growth, they will do well to move away from income taxes, especially corporate income taxes. Now, you guys remember last Game Plan Sunday, I gave you a history lesson about FDR, Franklin Delano Roosevelt, who the Democrats argue is the greatest president ever. This guy served 4 terms. He actually served 12 years. He died prematurely in his 4th term, I think 78 days or so in his 4th term. But he served the longest out of any president. And he's the father of welfare in America. He's basically changed politics and economics of America. That's where everything changed from this guy, okay? Banning gold and all this other stuff. FDR, that's what he did. He ushered all this stuff in. And so they call this guy Mr. Soak the Rich. Remember I told you guys about that? And the reason why you pay an income tax, you guys thought that it was normal that you're supposed to pay an income tax, but you're paying it because of World War II. We didn't even have to get involved in World War II, but we did. And so because we did that, this is the reason why you're still paying the income tax, still paying for this war. It's supposed to be temporary, but the government say things are temporary. It's always permanent, okay? And you will learn all of that in this book I was telling you about that F.A. Hayek wrote called The Road to Serfdom. And he says that, basically, if you give the government an inch, they'll take a whole mile. And when you ask for your inch back, you can never get it back. So you have to be careful about what liberties you actually sacrifice to give to the government. He says plain and clear that they always do it under the guise of war. He said the war on drugs, the war on poverty, the war on whatever. So you could just replace that with the war on COVID, which I told you, that's the experiment. COVID-19, the Great Reset. All right, so it's the war on COVID. This allow for the citizens to give away their liberties and freedom so the government can continue to do what they're doing. It's just crazy. The last one we had was 9/11. You had the Patriot Act. It is actually the anti-Patriot Act. We don't no longer have any privacy anymore. Government watches every damn thing, because of the whole terrorist attack. So again, this is a wild time to be alive. That's all I can say. So anyway, that pretty much covers, I think, majority of everything that, that took place last week. Okay. So with that being said, let's go through the charts. Here go your AMC right there in front of you, which is interesting. Somebody asked me, did I trade the AMC? And no, I didn't trade the AMC. This company here, again, I covered it before. AMC, GameStop, these companies are done. But basically what's happening is that, these Wall Street Reddit guys, I know a lot of, people are subscribing to them because they're thinking that they can find some free money by following these guys. And they're actually disrupting the financial system. And, they're basically going to cause these regulators to come in and ruin it for everybody because of what they're doing. So they had to halt the trading again on AMC. But you see all the pop-up was crazy. So you got to know, again, I don't hate on nobody making money. So if you were in there and you made some money, phenomenal. The problem is you new traders who didn't take the time to learn, you don't understand support and resistance. You don't understand when to get out. You guys are buying and holding and thinking that it's going to go up forever. There's no shortcut to this. You can't possibly think you're going to jump in this game and compete with the professionals and beat them. But it's no need for you to compete with the professionals. I told you guys before, my analogy that I told you about the sharks. The sharks are huge. Okay, you ever see sharks? They float through the water. They open their mouth. They just swallow shit, you know what I'm saying? Or they see a predator, they just rip them to shreds. But they be having like these small little fish that be on their body and shit, you know what I'm saying? They be a small little fish that float with them. And they not even looking at it. They ain't trying to kill the little small fish. They just, little fish be actually, in fact, they welcome the little fish. The little fish be up there cleaning the little algae and shit off their body and shit, you know what I'm saying? So they welcome it, But when they actually eat, okay, when they rip some shit together, they ain't eating the small crumbs. The small pieces are big pieces for the small fish. We're little fish, okay? We're not sharks. So these hedge fund guys and all this, they're sharks. Listen, when they eat, we eat. So it's no need to actually go and kill them. It's just ridiculous to me because when they eat, you eat, okay? And everybody eats. That's what a sound market functions like, okay? Everybody can eat. But when you have these imbalances in the system where you have these guys, these Wall Street Reddit guys are exploiting inefficiencies in the market, well, eventually the market actually fixes those inefficiencies by itself. You remember the market is like a self-healing body. It's going to find its way. Same way I told you about the ants. It's going to find its way to kill all of that. But while it's playing, if you're going to play it, just understand you're gambling. Okay. So I didn't actually get off on AMC, but I did actually use AMC as a proxy because I understood that the markets are super choppy. And because the markets are super choppy, there was nothing interested to actually really play because the markets didn't have any direction. So when the meme stock started popping, we saw so much volume. It was just crazy that I couldn't ignore it. But I used AMC as a proxy to play the other names. Now, AMC, the options on AMC was super expensive. And that's the reason why I didn't play it. They were too expensive. Okay. But if you went to like BlackBerry, okay, I used AMC as a proxy. As long as AMC was going up, the rest of the memes, I saw them, they were going up. So I played these names. Kodak. Like, who remembers freaking Kodak, okay? Kodak. Nokia. Okay, excuse me, and okay. Nokia, okay? But, these are day trades, okay? But you were able to make some good money because there was a lot of volume in there. There's a lot of action, a lot of volatility. So, if you could day trade, then yeah, that's what we got off on this past week. So that was interesting. All right. Now I'll show you guys this real quick. I just showed you guys earlier about the bonds. Right. I showed you guys earlier about the bond yields. Okay. Bond yields. If you can actually see here, they are looking like they are trying to come down. Okay, so bond yields go down, then prices go up. But basically, the yields go down because prices go up. Okay, on the bonds. All right. So, because that's taking place, if we take a look at bonds, the prices here on TLT, we can see that it's actually starting to go up. Okay. Now, this 100 moving average, it is let's see how much time we got. Okay, yeah, the 100 moving average here is right there. Okay, so I can see price coming up into this resistance zone. Okay, don't know if it'll go through it or not, but I can see it go through there. So my expectation for this week is that yields should come down some more, just because, again, that economic data from last week came out. The markets are choppy, but at the end of the week, you know, it got itself back together. So I think we could just give us some more time until the next, you know, big economic data. So bonds, you know, I believe that bonds will be going up. And what's tricky about this here, what's good, Marcy? How you doing? Glad to see you tonight. What's also tricky is that when you take a look at like gold, silver, again, we had the charts here. This doesn't look positive for the gold stocks. And I told you guys earlier, it's because of the expectation that the Feds are going to increase interest rates, okay? Which I don't believe that the Feds will, even if they are forced to. I don't think that they will. And so, again, if the market figures that out, then gold would do what it's supposed to do. But I don't see gold going higher this week. It could, but we can see momentum is starting to drop off. We got a trend that's coming down in here. We can see, you know, it's an overbought territory. Got resistance up here. We never cleared this strong resistance. We're right here at this 1900 resistance, and it hasn't cleared that yet. So we'll see. I think it might chop around a little bit. I believe that it'll hold this. I think it'll hold this line here, but I think it probably start to chop around a little bit. So that's, you know, my thoughts on the gold situation. We take a look at S100. We see that it's still going strong. And again, in a bubble economy, you know, when these things go in the overbought territory, they can play in overbought territory for a while. So just because we're in overbought territory don't mean that it's time to crash, okay? We've seen year over year, these past few years, that it could play, even though it's an overbought territory, that it can play, you know, for a little while. So I can't time in that way. I can't put too much certainty on the oversold and overbought territories because it gets crazy. I do have this JP Morgan target here that's still on here that we have not hit yet. JP Morgan's 2021 target of 4,400. And because we are pretty close to it, I think there's a strong possibility that we could actually hit that. I don't think we can hit it soon, but I think that we could hit it for this year. If we take a look at here, we got the trend is coming up. We got an extended squeeze, so ain't no telling what's going to happen with that. But we can definitely see 4,300 here soon, okay? But that 4,400 target, just keep that in mind. Put it somewhere on your chart. This is not my target. This is mainstream. This is JP Morgan. So I'll just keep that as a reminder. Yes, Marcy, you will be able to replay the video. So if you missed it, you know, we'll drop the replay after I do the edits tonight. And you guys will get that, you know, in your inbox. And it's also on the website as well. All right. Nasdaq. So the Nasdaq is looking like this. I think that the Nasdaq is going to have to carry the markets for this week. I think the Nasdaq is going to have to come back to carry the markets for this week. You know, here's the most recent high. It's not, you know, super extended. You know, it came back down to the 100, starting to come back up, chopping around at the 786. It may continue to chop, but I think that it's more than likely will, you know, continue to go sideways or higher. Okay. So tech, I will be looking at some tech names because of that. In fact, a couple of tech stocks was getting off. Okay. Or they may be a little close. Like you take a look at Google. Okay. You take a look at Google. You know, I had these extensions that's here in the way. This resistance. Okay, you can see the resistance here, but price is looking like it's going to push through those resistance lines. And if it does, we can see a 2,500 target on here. But again, it still hasn't quite broke out yet, but it's looking to break out. So Google, you know, Google's doing their thing. I don't see no real risk there. Google's going to continue to make money advertising and doing what they do for businesses on the internet. So I think that's going to continue to do what it does. Microsoft is another interesting situation here, where it's got some room to grow. Microsoft is pumping pretty strong here. We got that 100 moving average that's looking like this. We had price to come down, boom. Price came down, boom. We can see the trend is constantly going up. Price is getting above there. So I think that we can get higher, about 260. I think that we can get there on Microsoft. So something to keep in mind. So yeah, if you take a look at that whole sector though, if you see the XLK, this is the tech sector. The tech sector is actually doing good, and it's maybe shaping out to be a little bit of a freaking cup and handle, as Ron he likes to play. Could be, you know. You can see a little rounding situation in there. Okay, and that's a bullish pattern set up. So the sector is looking, you know, to me, a little better than some of the rest of them. You see that big candlestick is going up. Let's see if it can come up there. We've got a squeeze and everything. And the floor is well down here, so it's moving above that. So, you know, feeling bullish on tech coming in this week. What else did you say you guys have? Oh, financials will actually do anything, but financials is getting top heavy though. It's interesting. It depends. You know, if the Feds raise the rates and everything like that, then that's good for financials because then they can finally make some money. But they can make some money off those products, those debt products that they have. But we'll see. We're in overbought territory. We got a squeeze in there. This may continue to drift a little higher. But a lot of those names, you know, we're doing a thing. Let's see what else we got here. But yeah, overall, I'm looking at tech. See if we can get some movement in tech coming in. Let me actually take a look at the rut. Russell's looking weak. Okay. Russell's looking weak. It's overbought. And it's starting to, like, you know, taper off a little bit. Did not clear this level here. A couple of weeks ago, we did an iron condor on that. All right. And as you can see, that's definitely the strategy for that. For those that was looking to play the Russell, you can play the IWM. Okay. And as you can see right there in that range, that was the standard deviation right there. So as long as it trades in this range, you good money. Okay. So it's still chopping around. And again, that's the indecision. Nobody knows where to go right now. It's crazy. All right. Yes, you did drop those earnings. And I'll take a look at that when we come back here as well. All right. For those taking a look at the Dow Jones. Okay. So the Dow's looking a little good, you know. We got an extended squeeze on it. Price is moving higher. So positive on the Dow Jones. We can see that right there. It's clear as day. It's moving up. Almost 3,600 or 3,550 targets us up ahead. So that's looking a little positive from the Dow Jones. Show you guys Bitcoin, because I know a lot of people crazy about Bitcoin. And here's my charts that I did on Bitcoin. Bitcoin has lost a lot of value. I think like 76% from that high up there, 65,000, all the way down here, which is, again, I was telling you guys back then, if you don't have the stomach for it, because again, I was telling people, I know y'all like those rides up, but those rides down, they're even worse. And Bitcoin makes some stupid, dumb, crazy moves all in one day. Okay, you can really get hurt with this thing. And so we saw it, you know, coming down with the bear flag, and here we go again. Look at my Fibonacci catches it. Look how it's starting to trade in that range. Okay, so it's chopping down here in this range. When we remove this, we can see the moving average, the 8 moving average, that little red line right there. Price is still trading under that. So as long as price is trading under that, Bitcoin is bearish. We're seeing it look like it's dropping down. You would expect for it to go up since they had this conference over the weekend. But I think the conference did not do enough to elevate this. And you guys got to remember, as I was telling you before, that Bitcoin, I know that people believe in it. Belief is a powerful drug. This is a experiment. It really is an experiment that people will assign value to something that is really nothing. Okay. You can't do anything with Bitcoin, right? I got a little, my little daughter, it's interesting. She was talking about gold and silver. I got, a little bit. And she's like, she wish she had some more gold. It's funny because you can see it, you can hold it, you can touch it. And it's like, oh, I want more of this. Like I could do something with it, right? I could wear it. It looks beautiful. You can't do none of that with Bitcoin. It's in the computer world. So people that's, crazy fanboys about technology and stuff, obviously would be excited about this. They're going to pump it up. I'm just personally sick and tired of YouTube showing me these damn commercials every time I jump on Bitcoin, crypto. I'm like, stop it. Okay, stop it. But again, as Topaz says, I'm not going to shit on somebody else's baby. But if you in this, you need to know what you're doing. It is purely speculative. And I know that people want to have decentralized money, and I am all for that. But I just can't see the government allowing Bitcoin to overthrow the government. If Bitcoin could overthrow the government, great. But I just can't see that I can't see that being a possibility. You know what I'm saying? You say you tired of the crypto friend? I'm telling you, man, they're like roaches right now. Okay. It's crazy. But what's funny? The crazy thing is that you have so many, young people, people that's like 24. I mean, they sound like they're freaking experts on crypto, and they, guiding each other. Just hold on to your Bitcoin. It's going to go to 100,000. It's going to go to 100 million. Wow. I mean, when I tell you the craziness that's in this game right now is so absurd. This is beyond the 2000 .com bubble, but a lot of these people didn't live in that time, so they have no point of reference, and they say, oh, it's different this time. Technology is better this time. Oh, it's different this time. It's never different this time. Okay, it's never. It's always the same shit. And I was telling you guys about y'all know I went on my rants before about Elon Musk with his space companies, Tesla, and then the Virgin Galactic with Richard Branson and all these guys, Jeff Bezos, all these guys is doing space. None of them are doing this stuff with their own money. You'd be out of your mind to waste money on this stupid shit, to be honest. So they are using government money. They're getting paid with government, taxpayer dollars is funding all this stuff. And so what's funny is that when Anonymous was threatening Elon Musk, that's what he was saying. Anonymous is saying, bro, like y'all haven't made no money off of selling Teslas. All your money actually came from the purchase that you made in Bitcoin. And you get all these government subsidies that's funding your operations. I've been telling y'all about that. That's why Tesla has been such a huge short. But this past year, they've been ripping shorts' heads off. So I know I haven't been touching Tesla, for that reason. But the year before, Tesla was the short of the year. Okay, made a lot of money shorting Tesla because they always overpromise and underdeliver. So, but you got people that's they have strong belief. Belief is a powerful drug. People believe in stuff like a religion. But it never pans out the way that these technologists say that they will, And I'll tell you guys all the time, I got 5G. I've been having 5G for like 2 years, and I don't see no benefit. I'm fine with 4G, to be honest with you, I connect to 5G when I'm in traffic, and that doesn't do anything for me. Okay, so we'll see how it plays out at the end. But anyhow, that's what we're looking on at. Let me actually just pull up the earnings coming up for this week. For those that's paying attention, Topaz did post those earnings on the site. She got the IPOs in here too. Topaz been handling things. Krispy Kreme's supposed to be actually going back public again after 5 years. I don't know if you guys saw that. I don't know if I posted the IPO group or not, but I think I did. Right here's the IPO group. But I didn't know Krispy Kreme was based here in Charlotte, and I thought that was interesting. I said, no wonder they got Krispy Kremes all over the place. But Krispy Kreme has been losing lots of money. So it's interesting. They come to the stock market to raise money like it's a giant GoFundMe account. I mean, that's what it's really doing. I mean, these SPACs and stuff, it's getting free money for the markets. People got all this money, they're going to give it to them. So they just take your money and make promises, with these pie in the sky dreams, and people believe in it. And if you believe in it, you're going to spend your money on it. Anyhow, here's the earnings coming up. Monday looks like it's going to be a little light. We got Marvell, we got Stitch. I don't really care about the rest, but Tuesday we have Academy Sports and Outdoors. Those are pretty cool because you can get your blammers off in Academy. Let's see who else. Don't care about the rest of these in here. Wednesday, GameStop after the bell. Okay, so not before the bell, but after the bell, GameStop. You know, people are gonna be crazy about GameStop. So I think that's gonna be, you know, big for that. The rest don't really care about. Thursday, Fuel Cell Energy, Chewy, Dave and Buster's. Let's see. Yeah, the rest of them, all right. Friday is going to be really light. So I think we'll have less volatility on Friday. Wednesday and Thursday, we'll get more volatility there. Other events that's coming down the pipeline for, let's see, Monday, the Federal Reserve reports consumer credit data for April. So we're going to get some economic data on Monday from the Federal Reserve about consumer credit. A lot of people are spending credit, not dollars. So we pay attention to that. We had the National Federation of Independent Business release its Small Business Optimism Index for May on Tuesday. And the Bureau of Labor Statistics will release the job openings and labor turnover survey for April, also on Tuesday. And then on Thursday, we're going to have the ECB, the European Central Bank. They're going to announce their monetary policy decision. They're expected to keep it their short-term rate at negative 0.5%. So they're negative over in Europe. They expect them to keep that the same. We'll also have BlackRock's 2021 Investor Day. So some people may be interested in that. The BLS report, the CPI for May. We talked about, you know, inflation, the CPI. That's going to, again, release on Thursday. The Federal Reserve released its first quarter financial accounts for the U.S., which tracks household net worth. Okay, so what's the net worth? That's going to be on Thursday as well. They said that at the end of last year, total household net worth stood at an all-time high of $130.4 trillion, an increase of more than $12 trillion from 2019. So we'll see what that looks like. And then on Friday, we'll have the University of Michigan release its Consumer Sentiment Index for June. And President Joe Biden will attend the G7 summit, which runs from June 11 to June 13 in Cornwall, England. Those are the major events that's coming up this week. Okay. Did anybody have any stocks y'all want to take a look at here? We'll open the floor for about 5 minutes, and we'll take a look at a couple of those things. And again, you guys can check out the events calendar that's right here on the website. It's always here on the website. And again, drop those tickets if you got something you want to take a look at. If not, then we'll bring it to a close. But when you're on the website, upcoming events, plastered right there in front of you, so you know what's coming up. You know what's coming up every week, basically. Okay. So always be on the news feed throughout the day, and then hit the chat room also. So we're in the chat room. I'm in the chat room. This is how I do it. I'm in the chat room with y'all live. I got the news feed in my background, like you see right here. So whenever something's new dropping in the news feed, I know what's popping. Okay. And we're consuming that information live while we watch the markets and call plays and see what's popping. You know what I'm saying? So, you know, everybody can participate. Let's keep that in mind. This is the chat right here. So if you want to get the live feedback and everything, you're right here, right in the chat room. Just click on chat room. Bingo. All right. So a couple tickets has just dropped up. Ron B coming through with Disney. Disney is not looking positive for me. Take a look here. We'll see. But when we take a look at the 50 and the 21 moving average, I'm actually going to switch this over to yellow real quick because I just like using yellow in this background. All right. Well, you guys can see this key resistance level here. Price came down. Boom. It got rejected and it's coming down now. Although we got a little buy trigger in here, I can't trust it because price hasn't cleared those moving averages yet. Price has to clear this resistance. So we have to see, you know, if it does clear, then that's a good sign. We can reassess it. But right now it doesn't look good. And we can see that it's starting to trend downward here. Okay, we can see that's looking like they're downward, although the trend is up right here. But you got to remember that resistance is strong. It needs to clear this path in order for me to consider it to the upside. Okay. Airbnb. Yeah, Airbnb, I think it's coming back. Okay, we can see Airbnb drop down, boom, hit that floor. We see prices going up higher lows and higher highs. Okay. So it looks like it's coming up some. You're with the summer here in play. I would expect for it to be more higher. I would expect it to be even more higher, but it's chopping around at this line right here. So I don't really actually know where it will go, but it seems as if it should, actually perform a little better than what it's doing right now. And, it's kind of chopping around up here. If anything, I can see it going up to about 160 if it stays positive. But yeah, it's starting to form into a squeeze here, which is interesting. So this is the low. So, probably look at some spreads on that, to catch the sideways choppiness. And if it does go up, you can also benefit from that also. But yeah, you would expect for it to go higher with everybody's vacationing right now. Everybody's out, but it's not, which I think that is interesting. DAC, Chris come through with was that denials? Never heard of this name, but interesting. When we take a look at it, the overall trend for the stock is bullish. However, we see prices starting to come under the moving average. We got a sell trigger that's in here also. And we can see the stochastics and everything is pointing downwards. The trend is pointing downwards. So it's a tricky. I never like to short in a bullish trend, but if price breaks, then you know what you need to be doing. So, but the position that the price is in right now doesn't look positive, although the overall trend is still bullish. It hasn't broken this trend yet. Okay. But should that candle break even further, then you're going to get your confirmation signal from that, but it is looking, it's not looking good right now, especially with breaking underneath the non-moving average. Once it cleared at 20, if it breaks under the 20, then you already know the floor is going to be 50. The next floor is 50. So I don't have a positive outlook on that until the price again corrects. Apple is looking interesting right now. We got the 200 moving average. This is the main level right here. And we can see price is right there. It's been chopping sideways. We have the trend that's moving up. We have a squeeze that's here. Stochastics on the fast side is moving up. Buy triggers in. For that reason, I am looking for a bullish direction on Apple, but keep in mind, price needs to clear this 100 moving average right there. That will be the signal that will make everybody jump in this thing. And then we can come back up to like the 135 to try to, break this level. But I do like it to the upside. We'll see. Other names like Amazon looks pretty similar. Hasn't really been performing the best. I'll pull it up. Amazon is chopping around. It's actually looking worse. So I don't even like Amazon right now until it can break from this chop show that it's got right here. But prices you see is under the 200 moving average. It's going sideways. This is not looking good. Looks like more pressure is coming onto this thing. So I think that we will actually get a decision on Amazon this week. It's got a squeeze in here, a decision as far as direction. Okay. If we get a major break in here, Amazon is going to break. Okay. If not, it'll reverse and then we'll be back above those things. Right now it's a little too early, but this week we'll get a better picture of Amazon. Okay. So, with stores opening back up and stuff like that, people are less dependent on Amazon. So maybe this is having a negative impact on Amazon, stocks as well, since people are able to go and shop now. I've been out, all week and, there's no mask requirements and stuff like that. People are just out like everything is normal. And I told you guys that before, man, before they was promising things will never be the same. And, this, that, and the third. I mean, everything is like it's back the same before COVID hit, everybody's back at the swimming pools. Everybody's at the beach and, having a good time. They had you thinking that, the Rona was AIDS in the air. If you go outside, you're going to catch it, you're going to die. And, but after a year of observing it, people are able to make a conscious decision to take the risk of going out with a mask or without a mask. You don't see people's skin bubbling up or some kind of biblical looking plague that's out there. Because if so, you wouldn't need the government to lock you down. You just put yourself on lockdown. But, people are ready to come back out now. So that looks good. But inflation is still going to be the number one key. We're going to still pay attention to what's happening on the inflationary front with this data. This G7 meeting stuff with the governments talking about, taking, more taxes. That's really going to hurt the bottom line of the S&P overall. with the government taking more money from corporations. And then with them trying to, pin them in the corner, we're having other countries to forcing other countries to come in on it is crazy. Now, you know what I forgot to mention to you guys, though? Did y'all see the joint with the Russian wealth fund dropping all of his dollar assets? Now, that was crazy. It's on the news feed, so make sure you guys check that out. But they're trying to de-dollarize the dollar, basically. Russia, China, and they're buying lots of gold. They're buying other foreign currencies, but they're selling all the dollars. So this is going to be problematic, and they're talking about all the stimulus that we're doing, and these other countries are starting to lose faith in the U.S. dollar. So Russia already done led the assault with dumping the dollar. And so what happens if everybody else dump the dollar? I mean, you're in mad trouble. So also make sure you're checking the dollar out throughout the week, because of the dollar, you can just take a look at it right here. The UUP, this is easy for you guys. If you want to play this one, you can play the UUP, or you can do the DXY, but this is it right here. When this gets strong, okay, when the dollar goes up, we've been seeing equities go down. So stocks has been going down. So we saw stocks was having a major sell-off with that pop-up, but then you saw the dollar come down on Friday. So from up here, down here, the stock market recovered. So just paying attention to that dollar there, real interesting thing. So keep an eye on that. We have been seeing some correlations on that. So, we'll pay attention to that. Other than that, man, if you guys got any questions, make sure you hit us up on the website. I'm going to drop that group right here in the chat room. Not in the chat room, but down in the group section. We're going to drop a movies and TV show joint for you guys so you can check out if you're looking for some things to watch, to further your education in the markets. If you haven't signed up to Wallstreet Jackboyz, make sure you do. Registration to the website for the social media feeds is all free. If you want the training to learn how to trade, I definitely encourage you to do so. You can go to the courses up here. The Options Trader Masterclass, the Time in the Markets class is a freebie to help you to understand a lot of the things that we're talking about. So definitely get that when you get the Masterclass. And with that being said, man, we'll call it a night, and we'll catch up. Yeah, I'll be in the chat room tonight and tomorrow. So, on Friday, I won't be in the chat room until the afternoon. So y'all make sure y'all hold it down. I know Jonathan, he normally holds it down, but y'all jump in, and hold it down for the most part on Friday. All right. With that being said, man, y'all have a good night. Peace.